Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. No matter how safe an investment sounds, there are risks involved. To read more about it, please see the description below. And if you want to read about what John writes on a regular basis, you could go to www.incomeinvestors.com. Since Jerome Powell spoke at the last year's Jackson Hole, the Federal Reserve has hiked its key interest rate to a 22-year high of 5.4%. From a peak of 9.1% in June of 2022, inflation has cooled down to about 3.2% now. But that's still 60% above the Federal Reserve's target of around 2%. A welcome development, but still a lot more work to do. To that end, Powell is prepared to raise interest rates further if necessary. That should, for now, put an end to the question about exactly when Federal Reserve is ready to start easing. This interest rate sensitive environment will continue to be boon for real estate investment trusts, or REITs for short, like Arbor Realty Trust. They are traded on New York Stock Exchange under symbol ABR. John?
Yeah, thanks, Mo. We last looked at Arbor Lake Realty Trust in early June. At the time, it was trading for around $13.47, and it paid a dividend of 42 cents per share. Since then, Arbor Lake Realty stock has rallied an impressive 28%, and its dividend has increased 10% on an annual basis to 43 cents per share.
John, if you could quickly go over what does Arbor Realty Trust actually do?
Yeah, Arbor Realty is mortgage REIT, or MREIT, that invests in mortgages. When most people think of REITs, they think of companies that invest in real estate, but that's not what Arbor Realty does. MREITs provide financing for income-generating real estate by purchasing or originating mortgages and mortgage-backed securities. They earn income from the interest on those investments. Now, Arbor Realty invests in a portfolio of structured finance assets in the multifamily, single-family rental, and commercial real estate markets. It also acquires real estate property and invests in real estate related notes and certain mortgage related securities. Now, the vast majority, which is around 90% of its structured portfolio asset class, comes through multifamily loans, followed by single family rental at 8% and healthcare at 1%. Land, healthcare, office, student housing, retail, and commercial make up the rest. The investments consist primarily of bridge and mezzanine loans, including junior participating interest in first mortgage, preferred and direct equity, single family rental portfolio financing, government-sponsored enterprises, or GSE, and housing and urban development, or agency, lending, and private label. The company's $13.5 billion portfolio creates many diverse income streams, generating significant prepayment protection, annual revenue with 9-year average remaining life.
John, thank you so much for providing insights on what Arbor Realty does. Now, let's really dig into how did this company do in the second quarter of this year?
Well, you'd hope that an MREIT, because it's an alternative sort of bank, would know how to make money, and Arbor certainly does. In the second quarter of 2023, net income increased 9% to $76.2 million, or 41 cents per share. The most important, or more importantly, distributable earnings were up 22% at $114 million, or 57 cents per share, and that's well in excess of its current quarterly dividend of 43 cents per share for a payout ratio of just 75%.
And I want to quickly talk about dividends here as well. What are the payouts like here?
Well, in general, investors love REITs because they legally have to return at least 90% of their taxable income to shareholders, which comes in the form of a frothy dividend. Better still, REITs tend to perform well in a high interest rate, rising inflation environment like the one we're in right now. So to that end, Arbor Realty Income has raised its annual dividend for the last 11 years. This includes numerous increases each year. It increased its payout every quarter in 21 and 22, and so far it has raised it 3 times, or every quarter so far in 2023. This past July, the company announced a dividend of 43 cents per share. That's up from 42 cents per share in the previous quarter and 39 cents per share in the third quarter of last year. This works out to an annual distribution of $1.68 per share for a yield of 11.21%.
And John, before we go, how is Arbor stock doing?
Well, in addition to a growing dividend, shareholders have also been enjoying solid gains. Arbor stock currently up around 30% over the last 3 months, 32% year to date, and 16% year over year. And as noted earlier, it's up roughly 28% since we last profiled Arbor Realty in June. Again, the outlook looks solid. Analysts have provided an average 12-month share price target for Arbor stock of $16.25 with a high estimate of $18.50. And that guidance is actually up from June's profile price target range of $15.50 and $17.50. And the current high estimate of 1850 would actually put Arbor stock in record territory.
John, thank you so much for your analysis. Just to recap, Arbor Realty Trust Inc. continues to be a great REIT for both income and growth investors. It continues to report strong quarterly results, has increased its dividend for 11 years, including 12 of the last 15 quarters. And by all accounts, that growth should continue. Distributable second quarter earnings of 57 cents per share are well in excess of the current dividend and represent about 75% payout ratio. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.